In this video, I'll take a look at Forex Sessions. So, Forex markets are open 24 hours a day, 5.5 days a week. However, markets are generally thought of as being split into sessions. This is based upon the normal business hours of major cities in each sector of the world, and therefore it's used as a benchmark to describe what part of the day you are in. Because when you are dealing with a 24-hour market, to say 2 o'clock doesn't really mean anything if you're talking to somebody in Namibia, but you are in India. So instead of doing a lot of conversion, a lot of people will say it happened during this particular session. So what are the sessions? Well, it follows the globe, really. Think of the GMT clock, because as a general rule, as Forex traders, we use GMT to describe where we are in the day. So the beginning of the day, you start with Australia, because Australia, New Zealand, they have the first crack of the day as far as waking up, and that is the Australian or Sydney session. Now, this is a very illiquid time of the day because they're the only ones on board, and they're not huge countries, but we do have quite a few banks in Sydney, so that's why it's called the Sydney session. Next, you'll have Japan and China. Now, this is quite often referred to as the Tokyo session because of all the banks in Tokyo. However, over the last few years, you're starting to see a lot more Chinese banks involved. So you're starting to see the term Asian session more. They are used interchangeably, and it doesn't really matter if you hear Tokyo session, Asian session, same thing. It's during this time frame when Japanese banks are open for regular business. It should be noted that the Aussies, the Australian banks, are still open during the Asian session for the most part. I mean, towards the end of it, they aren't. So Sydney banks are still doing business, Tokyo banks, Shenzhen banks, Beijing, Hong Kong especially, they're all on board. So things are moving a little bit better. Now, as they all go to bed, or in their trading day, I should say, then you get the EU and the UK. This is colloquially known as the London session or European session, you'll hear. And this is where a ton of banks are located. So this means the market is going to become much more fluid, much more volatile, much more liquidity. And then this is followed by New York or the U.S. session. Now, the interesting thing about this is for the first half of the day in New York, the Europeans are still on board. So you have New York and London, Frankfurt, Paris, all of them going head-to-head, Glasgow. A lot of big banking centers are online at the same time. This is the prime part of the day as far as liquidity and movement is concerned most of the time. It should be noted that even the Australian banks here during the New York session, they are going to have junior traders on the desk. And they are going to close out positions or manage positions based upon news coming out of New York, for example, or that time of day. They're not going to just let the trades run. Now, if you're in a prop shop, the day trades, obviously, they won't be in the market at all. But if you have longer term standing positions on, you've got somebody monitoring it. So it's not as if there is no Australian banks during this time frame, but this is by far the biggest liquidity. They don't really enter new positions this time of day on the whole. So when you look at charts, sometimes you can flat out tell what time of day you're in. So let me go ahead and switch this to show the period separators. And then I'll switch it to like the 15-minute chart. So this is your average day, and this is Australia, and this is Asia, and that's Europe, and that's Europe and America to about there, and then that's just America. So you can see that Europe, and America, that's where we got the most movement. And you'll see that most days, right? Asia, we opened up, we gapped lower, rallied a bit, pulled back. Things kind of ended up settling right here. Got, that was Australia. This is Asia. This is Europe. This is Europe and New York. This is Europe and New York, and that's just New York. So you can see it tends to move much more during Europe and New York. Now, you can trade any of these times. You can't, if you have a job, obviously, you have to work around your job. So what does this mean? This means that if you are trading like just Asia, then maybe you're expecting smaller moves. But if you're trading the New York London cross, then you're expecting bigger moves. It just comes down to adapting your system to what time of day you're trading.